Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Well, folks, as we begin a new week, we've got a fair amount to cover tonight. I am going to introduce some things that I want to talk about on the live stream on Wednesday, so make sure you mark your calendar for that. One of the things I'm going to talk about is some of the bubble theories that are out there and inflation, primarily the M2 velocity that is just collapsing and what that means. I've seen a lot of stories about the end of the employment claims that a lot of folks are at their 1-year mark, may not be eligible to continue to get any type of benefits. And I actually think this is a positive, not a negative. I've seen it played up as a major negative in the economy, and I think that's going to put enough pressure on people to get out and go back and work. A lot of these folks that are out there are in hospitality and other industries that have been strongly impacted by this shutdown, and it's starting to come back with all the vaccines and everything we're seeing. I believe they're going to go back to work, and the economy is going to continue this open trade. This is not really coming into play till later, but I'll go through that in detail on the live stream on Wednesday. There's a couple other things I want to talk about as far as inflation and other issues, especially around the bubble that everybody is talking about. It's basically a bubble of everything. And the unfortunate thing, which I'll mention quickly before getting into some of the expectations for this week, is that a lot of this inflation that's going on, or inflation meaning the stimulus and all of these things, are just now beginning. And so we're going to see a continued amount of flow into the economy, and that's going to keep things bolstered for a while. So let's go ahead and let's take a look back on last week. On a weekly basis, the S&P was up 1.4, NASDAQ up 1.4, and Russell up 0.9. The Russell continues to lag a little bit. I still believe that the large cap tech stocks are going to continue to lead for a while yet. But also, as we just look at the sector by sector returns last week, we had 10 of the 11 sectors positive, some of them substantially positive. And as we look back, the news that we saw last week, all the economic news that came out, was way better than expected, including the claims number, which was down over 200,000 claims over the previous week. It was expected to be in the 700 plus handle, came in at 540 levels. So this is a substantial change in how the claims are coming out. And this is the lowest it's been since the pandemic issues started. And as we look at the big drop in claims, we're not seeing the drop in the continuing claims. And I've been talking to you about that. I'll talk about that more on Wednesday and Wednesday night's video before that comes out. We're really just looking at this number being immaterial as long as it's above 3.2 million. I don't see any really big change or any impact by that number until it gets below that number. The other thing that happened last week is the 10-year treasuries declined about 10 basis points back to 1.57. It actually did most of the movement in one day, was down 11 basis points. So we saw that come back in. That's neutralized some of the short-term inflation fears that were out there. As I mentioned in a couple of videos ago, I don't see the impact, at least on a short term, of interest rates or even inflation coming into play. From an economic viewpoint this week, we really don't have any news until we get to those claims numbers. They're expected to come in at 580. If you recall, those numbers have been 750, 800,000. So now we're dropping to 580 expectation after last week's numbers. And then also we'll see existing home sales expected to show 6.18 million and LEI to come out at 0.8 plus. That's really not a material number, but everybody's going to be watching these existing home sales numbers. The final number really of the week that's going to mean anything is new home sales, expected to show 900,000. I don't expect that number is going to be much higher, primarily because the big problem in housing is that supply and getting supply to the market. That's why we have the shortage of lumber and other elements in the economy. We also are starting earnings this week, and we have 326 earnings coming out. Monday and Tuesday, we have some pretty big companies coming out. We got Coca-Cola, I'm not sure that matters. UAL, I'm going to be watching closely. That says that reopen trade is going to be reflected there. J&J on Tuesday, PG, Netflix, Abbott, and CSX, which is a railroad. So that'll be watched fairly closely, I think, just looking to see how those performances are coming in, those industry groups. But overall, this week will be the beginnings of earnings. I've heard a lot of people talking about earnings disappointments. I still think there's going to be major surprises. I talk about this every earnings season, every time we come into the next cycle, is that even the analysts are really bad at estimating what the earnings are going to be, or they underestimate them to make everything look better. Almost every earnings were roughly about 70 to 75% of all the earnings reports come in better than expected. I don't expect any different here. I hear some noise out on the street about earnings are going to miss. Well, so far what we've seen, if you look at what's happening in the economy, the claims numbers, unemployment numbers, everything's just blowing up. We saw retail sales up 9.8% last week. So don't expect to see any disappointments here. I'm sure there'll be some. I don't expect this to be material this week. We'll see how they come out and see how the markets react to when they come out. The final thing that I'll mention before we get into the charts tonight is that our database of 16,430 symbols, we did see a nice bid come in on the daily models. We are above 42% now. I'll go through all the details here in a minute. But just to summarize this week, I think we're going to continue to see the bid that we saw last week, pushing the markets into new highs, continue this week. There's plenty of room on the downside where the market can correct on a moderate basis and still keep all the trends in place. I'll go through those details here in just a minute. But there's really nothing that I see right now from a trend viewpoint, from economic viewpoint, that's going to derail the markets, even though we continue to inch higher in a fairly low volume and low momentum environment. So let's go ahead and take a look at the charts and see how they're set up for this week. As I review the WaveTech database, we'll start with the intermediate database. It continues to be 75.81% bullish. It basically didn't change much at all. There was a rotation. I'll talk about that in just a few minutes. But one of the things I want to point out here is that we're seeing most of these sectors continue to be very positive. There's 11 of the 12 sectors are long on the intermediate level, 91% of the sectors long, groups 91.18%, 93 of 102. And when we start to look at the symbols, we see 12,456 symbols long, representing 75.81% bullish. But as we look at the sectors, you can see many of these sectors have performed very well. The only one that's having issues, which, interesting enough, is currently transportations, and that's been on for 62 days. There seems to be somewhat of a negative rotation going on there, and I'll be following that as we go through the next couple of weeks to see if this turns around or not. But as we go to the daily, you'll see that the rotation was very positive. We had 370 new buys roughly and 154 sell signals, pushing the bullish percent above that critical 42% to 44.12. We've seen it play with this number over the last several sessions. My expectation is that we will see this number continue to expand over this week, and with the earnings coming out and all the rotation that's likely, we should see this move up toward the 48 to 52% level as the next level. And the key levels as we go forward will be moving above 62% will actually put us in a very bullish mode. Overall, we're seeing a positive rotation here, which is likely to keep us in a bullish mode here for several more weeks. As we begin with the S&P futures, what we're seeing here is down 8 handles overnight, 4168.25 last trade. The PPM 1 is rolling over, PPM 2 is still in trend mode, PPM 3 is still expanding. And what this usually tells us in this type of configuration is that the market's going to continue along this slope. Now the key support levels on the futures right now are 41.22 is the 10-day moving average. The low so far overnight is 41.60, so this number is not really in play. But as we look at the market grid for tonight, you'll see that the most likely scenario is for this S2, which has already been satisfied, roughly 41.5825. The low has been 41.60.75. R1 41.84 is the likely target, so we're looking for an S2 R1. As I go to the weekly chart, the last time we had a buy signal on a weekly model was back at 35.69. So we've been long on a weekly basis. Since then, we continued to climb through this moving average pattern that I've been talking about over the last several weeks. Is the PPMs at a 0.62, 0.68, and 0.68 on PPM 3 as well. So this tells us that there's a high probability that we're going to continue along this upward slope for at least another 4 to 6 weeks. Now, it is possible that we could see some reaction and trade down into the weekly grid as we look at that. The S1 is 41.53, so S2 would most likely be the extreme on any sell-off this week, 41.27. On the upside, R1 41.99, R2 42.25. So it's possible we could see the 42 handle this week. And I'll go through, as we look at the grid for this coming week on the SPX on a weekly basis, 42.05 is R1, S1 41.65. We'll probably see an S1, R1, the possibility of going as high as R2, which would be a 42.26 level. Momentum is still very strong. We're at a plus 0.76, 0.78, and 0.69 ppm 1, 2, and 3. And this is, just as I mentioned in the futures, a very strong trend. As we go to the daily chart and look at the market grid for today, the expectations are for a S2 R1, which would be 41.71. R1 is 41.92, so that would be S2 R1. If we did get above R1, then you can see that R2 is 41.99, R3 42.07. So it is likely we're going to challenge these upper end of the range on the weekly charts, and on a daily basis, this will be the pivot numbers of R1, S1. So if we do get through S1, that would suggest that we would move down toward S2 based on the futures overnight. If we stay at the levels we're trading, then it could be an S1, R1 day for today. Next market I'll cover is the NASDAQ. NASDAQ is also continuing to be long. The last time we had a trade here on a daily basis was back when the NASDAQ was at 13.069, so we're continuing to ride this trade. PPM 1 is trying to penetrate through its second derivative, which suggests that we could test the 10-period moving average sometime this week. That level is 1841. We look at PPM 2 though, plus 0.42, PPM 3 is 0.15. So what this is telling us that we should have substantial support at that 10-period moving average. For today, that's basically the STX number. The 10-period moving average, 13.841, and 13.826 is the STX number. I don't see us getting to that level, just like with the S&P, and looking at the potential for, we're looking at a potential in an S2 R1. We did print down to 13,973, and S2 is 13,928. So I don't see us getting to that level. Most likely we've established a low and look for a challenge of R1 and a possibility of trading up toward R2, 14,131. As I look at the weekly chart, this is where the big story is being told. The NASDAQ futures, the S1 number 13,912, as I mentioned a minute ago, 13,973. We could see a little bit lower numbers, but most likely an S1. R1 would be the minimum for this week, the possibility of trading up to 14,276, which would be an R2 print. The momentum is still reasonably strong, more so in PPM 2 and 3, which are at a 0.65 and 0.70. PPM 1 is somewhat neutral, but I do expect to see this turn up over the next week or so, as long as we remain within the grid. And right now, that would give us an extreme level of 13,535. The final market I'll cover tonight is gold. Gold had a very good week last week. We did see an outside reversal. We even got an RTX sell, but we continued to climb higher within the pattern. Expectations now are for the market to remain above the 10-period moving average, 1752. That was the old resistance. Now that is support. Last trade is 1776, the low 1773. As we look at the market grid for today, 1773.90 is S1. It's basically the low of the day. R1, 1786. We're got an S1, R1 so far. I still expect to see gold move up toward that 1800 handle. 1793, 1840 is S1, R3. Let's go to the weekly charts, because this is what's setting up a major bottoming pattern here. There's still some work to do here, even though PPM 1 has gotten through its first and second derivative. PPM 2 has crossed through its first and second derivative, and PPM 3 is still in this bottoming phase. What this chart suggests is that we're likely to remain between the 10-week moving average and the 21-week moving average, which is 1744, 1803. As we look at the market grid for this week, you'll see that the 1806 is R2, S1, 1767, and we'd go all the way down to an R3 to get to that 21-period moving average. So expectation for this week is an R2, S1 pattern. Could extend down to S2, but my expectation is we'll stay within those bounds. This will complete the video for tonight. Thank you for watching. We'll talk to you tomorrow night. Hey folks, if you enjoyed this content, make sure you subscribe, hit that like button and the notification bell so you'll know when I do these videos.